Now let's begin with the exercise 3.5, determining relevant cost. And the requirements are, in trying to decide whether to restore the Lebaron or buy the ZRB, Liana is distressed because she has already spent 11,200 on the Lebaron. The investment seems too much to give up. How would you react to her concern? Now, the money already spent on the Lebaron is not relevant. So, the purchase price and the repair costs are sunk costs for the Lebaron. They are the same whether Liana restores the Lebaron or buys the CRB, because there are actually two choices for Liana. It's either that she will sell the old Lebaron and buy the new CRB. So these are the choices. Now in number 2 requirement, list all costs that are relevant to Liana's decision. What advice would you give her? So we have now all future costs that differ across alternatives are relevant. The alternatives facing Liana are restoration and buying the CRB. So restore the Lebaron or buy the CRB. Thus, all cost of restoration, the sales price of the Lebaron, and the purchase price of the CRB are relevant. The cost of restoration are 3,000 $110 given. The net purchase cost of the CRB is 5,500 net of the selling price of the Lebaron. So 9,100 minus selling price of the Lebaron of 3,600. If all other things are equal, Liana should choose the restoration alternative. However, all things are seldom equal. If the unreliability of the Lebaron, the hassle of having it in the shop, and the lower desirability of the convertible top are sufficiently important to Liana, it might be worth it to her to spend extra money to get the CRB. So though the CRB buying it with a net cost of 5,500 and the cost of restoring the Lebaron is 3,110, but we have to consider the qualitative factors, no, that are stated. So we have now 17-5. 6 is resource supply and usage, special order and relevancy. Now required in number 6, we have to classify the resources. Classify the resources associated with purchasing, be it flexible or committed. So we have now the flexible resources are the forms, the postage, and other supplies which are now given in the problem. And we have the committed resources are the clerks. We have the 4 clerks and we have the PC system with the cost of $1,100 per year. So we have now the committed and the flexible resources. Compute the total activity availability and break this into activity and unused activity. So we have now the activity availability is given at 26,000 purchase orders. So 26,000. The activity usage is 25,300 50 were processed, no? Actually, these are the actual number of processed orders. And we have now the unused activity of 650. Now in number 3, calculate the total cost of resources supplied for the activity cost and break this into the cost of activity used and the cost of unused activity. So for the activity cost, it's taken by multiplying 4 because we have 4 clerks times 25,750. That's the annual salary plus 1,100. That's the cost of the PC system. So, and we add 27,560 divided by 26,000. We multiply this by 25,350. So we now get the cost of the activity used, the activity cost 134,271, while the cost of the unused activity is 2,685 because the cost of the activity used is 4 times 25, 750 plus 1,100, and we multiply this by 650 over 26,000, the unused activity. So we now get 131,586 plus 2,685. Now with the supporting computations. Requirement 4. Suppose that the large special order will cost an additional 500 purchase orders. What purchasing costs are relevant? By how much will purchasing costs increase if the order is accepted? Suppose that special order causes 700 additional purchase orders. How will your answer to a change? So in number 4, since demand changes for the flexible resources, the cost of supplies increase by 530. I mean we are discussing the amount of 1.06, no? Taken by dividing 27,560 by 26,000, that will be 1.06. Multiplied by 500, so we get 530. That's the cost of increase in supplies. For the committed resources, there is sufficient excess capacity. So we have now 650 purchase orders equals 26,000 minus 25,350 to handle the special order. Now we go to number 6, requirement B. If the special order requires 700 purchase orders, there is not sufficient excess capacity to handle. An additional clerk must be hired at 25,750 and an additional PC system must be obtained at an annual cost of 1,100. The extra flexible resource cost is of the additional purchase orders is 742. That's 700 times 1.06. This all seems excessive for a one-time special order. There may be other options for dealing with the excess capacity requirements, such as using a temporary agency to hire a clerk and having this clerk work outside the normal shift to avoid the need to invest in a new PC system. However, the important point here is that additional resources are needed and are relevant to the decision. So in other words, you cannot easily decide to accept additional orders or additional purchase orders unless you are going to have additional resources. Next, we go to problem number 7 with 2 requirements. Classify the resources as flexible and committed. The flexible resources for the new tanning salon include supplies of 450 per month and the additional electricity of 100 per month. The use of each of these resource categories will vary with the number of tanning visits. The committed resources consist of the tanning beds and the wages for additional staff for the reception desk during the hours that the beauty salon is closed, but the tanning salon is open. This assumes that the extra hours that must be worked are as inflexible as the need for tanning beds. Currently, Roxanne has sufficient excess capacity to handle reception duties during regular beauty salon hours as well as any other cost for the remaining salon. Requirement 2A, suppose that the tanning salon does very well and Roxanne decides to add one more tanning bed using the third room at the back of the shop. What additional costs are relevant? Suppose that Roxanne decides to add 2 more tanning beds. How will your answer to A change? So in letter A, Roxanne decides to add a third tanning bed. The only additional flexible resource cost will be the additional use of supplies and electricity. The additional committed resource cost will be the tanning bed. But if a fourth tanning bed is added, all the costs of the third bed apply as well as the cost of finding a different place for the supplies that are currently stored in the fourth back room. Now we go to problem 3.8. It's still the same as special order decision. Special order decision, traditional analysis, or the qualitative aspects. Assume that the company would accept the order only if it increased total profits. Should the company accept or reject the order? Provide supporting computations. Now, the company manufactures sporting equipment, including weightlifting gloves. National Sporting Goods chain recently submitted a special order for 4,600 pairs of weightlifting gloves. Sports was not operating at capacity and could use the extra business. Unfortunately, the order's offering price of $12.80 per pair was below the cost to produce them. The controller was supposed to taking a loss on the deal. However, the personnel manager argued in favor of accepting the order even though a loss would be incurred. It would avoid the problem of layoffs and would help maintain the community image of the company. The full cost to produce a pair of weightlifting gloves is presented below. So we have now the full cost of 16.10. However, the fixed overhead component is 3.10. So meaning the variable component is only $13. while the order offering price is 1280. No variable selling or administrative expense would be associated with the order. Non-unit level activity costs are a small percentage of total cost and therefore not considered. Now, the company would accept the order if it will increase total profit. So, should the company accept or reject? Company should reject the offer as the additional revenue is less than the additional cost. The additional revenue is 1280 per pair, but the incremental cost for the variable component is 13. Now, that's direct material, direct labor, and variable overhead. So, it will incur an incremental loss per pair of 0.20. That will be 0.20 per pair. So, we have times the number of pairs will give 920 per pair. Now, number 2, suppose that Freeman Sports has negotiated with a potential customer and has determined that it can substitute cheaper materials, reducing direct material cost to 0.95 per unit. In addition, the company's engineers have found a way to reduce direct labor costs by 0.50 per unit should the company accept or reject the order. So reduce direct material costs by 0.95 and direct labor costs by 0.50. So cost will be reduced by 1.45, no? So the cost will only be 11.55. So that will be your, now the company should accept the offer as the additional revenue of 12.80 is greater than the additional cost, assuming fixed overhead is allocated and will not increase with the special order. So the incremental revenue is 1280 per pair, and the incremental cost after the adjustments will only be 11.55. So that will have an incremental gain per pair of 1.25 times 4,600 pairs. You'll have total increase in income of 5,750. In the consider the personnel manager's concerns. Discuss the merits of accepting the order even if it decreases total profits. If the idle capacity is viewed as temporary state, then accepting an order that shows a loss in order to maintain labor stability and community image may be justifiable. Qualitative factors often outweigh quantitative factors, at least in the short run. Oh, now we have problem 9, exercise number 9. It's again related to make or buy with the traditional analysis. So in requirement number 1, should winner company make or buy the parts, and what is the maximum amount per unit that winner would be willing to pay to an outside supplier? So we have now the cost of producing 55,000 units annually. And we have the part used with the cost of 62.05. However, the variable component is equal to 58.15. The variable component of the total fixed overhead assigned to AB is 43. 15,400 is direct fixed overhead. The annual lease cost of machinery used to manufacture part ABS 43, and the remainder is common fixed overhead. And outside suppliers offered to sell the part winner for 58. There's no alternative use of the facilities currently used to produce the part. No significant non-unit based overhead costs are incurred. So if winner would buy the parts from an outside supplier, the parts of 55,000 at 58 will incur cost of 3,190,000 dollars. In making the part, it will involve direct materials, direct labor, and variable overhead. The fixed overhead of 15,400. Direct fixed overhead, the annual lease cost of machinery is 15,400. That will be retained in making the parts. So in buying the parts, 3,190,000. In making the parts, it will be 3,213,650. So winner should purchase the part from an outside supplier that will allow him to save an amount of 23,650. And in requirement 2, what's the maximum amount per unit that winner would be willing to pay to an outside supplier? So it's now 3,213,650 divided by the 55,000 parts. So it's 58.43, the cost in making the parts. Now we go to problem exercise 10. Exercise 10 again has 4 requirements. Ignore the special study and determine whether the track assembly should be produced internally or purchased from the supplier. If the supplier has offered to sell the track assembly for 66 per unit, and we have now the using the traditional unit-based costing system that assigns overhead to jobs on the basis of direct labor hours. The estimated traditional full cost of producing the truck assembly. So we now have direct materials, direct labor, variable overhead, and the fixed overhead. Prior to making a decision, the company's CEO commissioned a special study to see whether there would be any decrease in the fixed overhead cost. The results of the study revealed the following. So for 3 setups at 1,160 each, setups would be avoided and total spending could be reduced by 1,160 per setup. One-off time inspector is needed. The company already uses part-time inspectors hired through a temporary employment agency. Yearly cost the part-time inspectors for the truck assembly operation is 12,300 and could be totally avoided the part here purchase. Now in number 4 requirements. So in number 3, here. In number 2, using special study, we have to repeat the analysis. So for direct materials of 104,000 direct labor, variable overhead, setups, inspections, and materials handling, and the purchase cost of 171,600. That's now the purchase cost for a total of uh, 66. That's the offer price from an outside supplier. So we have now the number of units of the component of 2,600. So 171,600 if you only buy the parts. If you will manufacture, so for direct materials, that will be 40 times 2,600. For direct labor, we have 2,600 multiplied by 16.50. So that's 42,900. And for variable overhead, that's 4,000 or 4.50 times 2,600 is 11,700. Now, for the setups, you are given the setups of 3. So 3 setups, and that could be 3 times 1,160 is 3,480. Then inspections of 12,300, and materials handling of 2,250. Now, what will be your materials handling cost? It's given at 2,000 here. Yearly cost of the part-time inspectors of the truck assembly operation is 12,300 and could be totally avoided if the part were purchased. And the engineering work is 470, and we have at 45 per hour. That's your engineering work, although the work decreased by 470 hours, the engineer assigned to the truck assembly line also spends time on the other products, and there would be no reduction in his salary. And we have now the 75 material molds times 30. So we have your materials handling of 2,250 with a total of 176,630. So now it's in favor of buying from an outside supplier with a net benefit of 5,030. Number 3, discuss the qualitative factors that would affect the decision, including strategic implications. In making this decision, BRIS should consider such qualitative factors as the quality of the part, the reliability of the supplier, the effect of labor reductions on employee morale, the possibility of price increases in the future, and the effect on the overall strategic position of the firm. The strategic implications are particularly important. Does BRIS really want to reduce the level of backward integration? If BRIS is pursuing a cost leadership strategy, is purchasing the part the best way of reducing costs? Or should it first examine ways of reducing costs internally before making a purchase decision? It may be possible to reduce waste and inefficiency to the point where internal production is much better from a cost reduction point of view than external purchase. And the last requirement, After reviewing the special study, the controller made the following remark. This study ignores the additional activity demands that purchasing would cause. For example, although the demand for inspecting the parts on the production floor decreases, we may need to inspect the incoming parts in the receiving area. Will we actually save any inspection cost? Is the controller right? So the controller does have a point. Purchasing the part will affect a number of other activities such as purchasing, receiving, and paying bills. If these activities do not have unused capacity that can absorb the increased demands associated with the new part, then resource spending could increase, and this should be factored into the analysis. Now that's problem number 10. Number 11 is resource usage model or special order. Now the company manufactures metal racks for hanging clothing in retail stores. Erling was approached by the CEO of Carly's Corner, a regional non-profit food bank, with an offer to buy 350 heavy-duty metal racks for storing canned goods and dry food products, while racks normally sell for $245 each. The center corner offered 75 per pack. CEO explained that the number of families they serve had grown significantly over the past 2 years, and that the charity needed additional storage for the donated food items. Since Erling is operating at 80% of capacity, and the Erling employees have adopted Carly's Corner as their annual charity, the company wants to make the special order work. Erling's controller looked into the cost of the storage racks using the following information from the activity-based accounting system. So we have now the activity-based data for the activity driver, the unused capacity, the quantity demanded, the activity rates are fixed and variable. This represents only the amount of resources demanded by the special order being considered. And this another one is the activity rate is the expected activity cost divided by activity capacity. Expansion of activity capacity for setups, inspection, and machining must be done in steps. For setups, each step provides an additional 20 hours of setup activity and cost 3,000. For inspection, activity capacity is expanded by 2,000 hours per year, and the cost is $20,000. And the salary for an additional inspector. Machine capacity can be based for a year at the rate of $40 per machine hour. Machine capacity must be acquired, however, in steps of 1,500 machine hours. So compute the change in income for Erling if the order is accepted. In number 11, we now assume that the order is accepted. So we have to compute for the change in income. So the income effect, the revenue will increase by 350 times 75. Direct materials by 82. Direct labor by 15. So we have to deduct all costs. And the inspection is 5 times 20. And the machining is 3. Now, these are your data to be. The initial analysis favors rejecting the order because income decreases by 10,985 if you are going to accept the order. And number 2, does the order require any change in capacity for setups, packing, or machining? Special order is so small that there is sufficient excess capacity for setups, packing, and machining to handle it without adding capacity. Only the variable cost of these 3 activities are relevant. And number 4, Erling can find no other cost-saving measures for this order. Why might the company decide to accept it even if it shows a loss? So new direct materials per unit is 82 minus the 13 savings 69. All direct labor hours per unit is 1.5 hours, and the direct labor per unit is 1 hour. Revenue 26,250. And we have direct materials. We only have 350. 350 now for our number of units, and direct materials now will reduce 69, direct labor will reduce, setups and inspection and machining cost will reduce by 525. So we have now in number 3, how is the analysis affected? So we have now the analysis. The order is still unacceptable, but with a loss of 3,680 instead of 10,955. Pero loss yapon. Number 4, Erling can find no other cost saving measures. Then Erling can find no other cost saving measures. What might the company decide to accept if even if it shows a loss? The company may still accept the order. It's a charitable organization, and the company may have funds dedicated to making contributions. Alternatively, perhaps a marketing department could work with Carly's Corner to be listed as a donor. The loss could then be charged to marketing expense. Actually, Erling could donate the whole order. It's a food bank. It's a food bank. People are hungry and earning employees have a special bond with the organization. It's possible that earnings. Okay, so there are numerous ways to make it work. Now in problem number 12, problem number 12 is about keep or drop traditional versus activity based. So in number 12, with the traditional income statement, so we have now the sales of 50,000 times 100 and 10,000 times 80. So we have the total, then for variable expenses, direct material cost of 2.5 and 480. So we have the total direct labor and variable overhead. And the only direct labor benefits and machine costs vary. with direct labor hours. All other overhead costs are fixed with respect to the driver. So with our direct material cost here, actually we are given only the direct labor hours, the receiving orders, and the material cost is per case. So we have now a material cost of 50 times 50,000 and 48 times 10,000. So we have now the total of the two products and the direct labor. Direct labor 40,000 per hour and 10. So we have now your direct labor cost of 500,000 and 80,000. Okay. 500,000 is 50,000 times 10 and 10,000 times 8. Then we have variable overhead. We have the computations. Only direct labor benefits and machine costs vary with direct labor hours. All other overhead costs are fixed and with respect to this driver. So the variable overhead now of 380 for the variable overhead, 360 for the peanut butter, and the cashew butter is 90,000. So we have now the total of the overhead cost of 450,000, and we deduct the direct fixed expenses given, and we have now the common fixed expenses given at 567,500. So we have now the amounts given for the fixed and the variable overhead. So we have now the direct labor benefits, and so for the fixed, for the variable overhead, we have now the cost associated with practical activity capacity. The machine fixed costs are all depreciation with direct labor hours as the driver. And these costs are to be the actual levels of the cost driver. So for actual overhead costs are listed below and classified as fixed and variable. So we have now the overhead cost for fixed total 500,000, and the variable is 517 500. And as stated, only direct labor benefits and machine costs vary with direct labor hours. All other overhead costs are fixed with respect to this driver. So we now have the variable overhead rate, direct labor benefits, plus variable machine overhead divided by direct labor hours. So direct labor benefits of 200,000 and 250,000 for the direct labor benefits plus the variable machine overhead. So that makes 200,000 as the direct labor benefits, and the variable machine overhead of 250,000. These are all given in the problem, divided by the number of direct labor hours. So we have the number of direct labor hours of 40,000 and 10,000. So the total of 50,000 hours. So now dividing 450,000 50,000 by 50,000 hours will give the direct labor rate per direct labor hour is 9. So for the peanut butter, we multiply 9 times 40,000. That's 360,000. For the cashew butter, it's 9 times 10,000 or 90,000. So the total of 450,000. For the contribution margin, for the difference between revenue and the variable overhead. So we have now for the peanut butter and for cashew butter. And we deduct direct fixed expenses for the fixed expenses of 200,000 and 60,000. So we have now the 200,000 for the letter B computations. We have 567,500, adding 200 plus 200 plus 100 plus 22,500 plus 45,000 is 567,500. So we now get the operating income of 962,500 using the traditional income statement. So using the traditional income statement, the operating income is 962,500. The cashew butter segment margin is positive. It should not be dropped. And requirement 2, prepare an activity-based segmented income statement. Repeat the keep or drop analysis. So we have now 4. Requirement number 2, using activity based analysis as compared to the traditional. So for the revenues, we still have the same revenues as above. The contribution margin of here 1,640 and 150 for a total of 1,790,000. Then the traceable fixed expenses for advertising, it's 200,000 and 60,000, total of 260,000. For the receiving, that's the amount of for letter B, 115,000 and 57,500. And for packing, we have 80,000 and 40,000 for the fixed component. Packing for peanut butter is 80,000 and 40,000, or total of 120,000. Now we are given the product margin of 1,245, and the operating income is still 962,500. The same as in the traditional format. So we have now the computations for letter A, the variable cost, direct materials, direct labor, and variable overhead, the same as in traditional. For the fixed receiving rate, we have 200,000 divided by, we have now the fixed receiving cost of $200,000, and then we divide this by receiving orders of 500 and 250 and 250. So that means 200 per receiving order. So 200 per receiving order. And for the variable receiving rate is the amount of 22,500 divided by 750 for the variable receiving rate. That's equal to 750. So we now get the rate of 30 per receiving order. Receiving for peanut line is 200 times 500 and 30 times 500. That's why we have 115,000. For cashew line is 57,500. And for fixed packing rate, we have the amount of 100,000 and we divide it by the number of here 1,500 and 500 packing orders. So we now get the fixed packing rate of 50 and the variable packing rate of 30. So the packing for peanut line is 80,000 and for cashew line is 40,000. So we now the analysis favors dropping the cashew butter line because product margin is negative at 7,500, which you cannot find under the traditional income statement. Therefore, the product margin can be used to determine product line profitability. That's for number 12. Then for number 13, sell or process further. Here we have the requirement. What's the gross profit earned by the original mix of products for 1 week? So we have now sales of 181, 800 for the total 181,800 taken by adding all the revenues. And we have the cost of goods sold of 133,500. Again, adding by we add the joint cost. So we have 133,500 you add direct materials, 84,500 direct labor, 29,000 in overhead of 20,000. So the gross profit of 48,300. Should the company separate the organ meats for shipment overseas or continue to sell them and split off? What's the effect of the decision on weekly gross profit? So we have now the revenue, sell, split off point for 9,800. That's selling at split off point and the further processing cost is 54,650. So the differential amount to process further and further processing cost, in other words, it will give a gross profit additional of 2,130. Further processing will increase profit by 2,130. Joint costs are irrelevant. They will be incurred whether or not the organ meats are processed further. Now we go to problem number 14. Problem number 14 is relevant cost for the foreign trade zone. If Global Reach locates the warehouse in a foreign trade zone, how much will be saved in tariffs? So we have now Global Reach considering opening a new warehouse to serve the Southwest region. Darnell Moore, controller of Global Reach, has been reading about the advantages of foreign trade zones. He wonders if locating in one would be of benefit to his company, which imports about 90% of its merchandise from the Philippines, jewelry from Thailand, and the pottery from Mexico. Darnell estimates that the new warehouse will store imported merchandise costing about 16.78 million per year. Inventory shrinkage at the warehouse due to breakage and mishandling is about 8% of the total. The average tariff rate on these imports is 5.5%. So in requirement number 1, we have for number 14, the tariff savings will be 16 million 780,000 in number 4, number 14. Okay, we have now the tariff savings, and we multiply this by 8%, 16.78 million. And we multiply this by 8%. That will be your inventory shrinkage and the tariff rate of 5.5%. So the tariff savings will be 73,832. By locating the warehouse in a foreign trade zone, Global Reach will not have to pay tariffs on the imported goods until they leave the zone when they are sold to retailers. Since the broken items will never leave the zone, tariffs will not be charged on them. So in number 2, suppose an average the merchandise stays in a Global Reach warehouse for 9 months before shipment to retailers. Carrying cost for Global Reach is 6% per year. If Global Reach locates the warehouse in a foreign trade zone, how much will be saved in carrying costs? Well, what will be the total tariff-related savings? So the carrying cost is 73,832 times 9 over 12. Now it's for 9 months, and then we multiply it by 6% per year. So that will be 3,322 round off. The total tariff savings will be 77154. Suppose that shifting economic situation leads to a new tariff rate of 13% and a new carrying cost of 6.5% per year. To combat this increases, Global Reach has instituted a total quality program emphasizing reducing shrinkage. The new shrinkage rate is 7%. Given this information, if Global Reach locates the warehouse in a given trade zone, how much will be saved in carrying costs? What will be the total tariff-related savings? So we have now the new tariff savings will be 152,698. The new carrying cost will be increased and increasing the total savings. That's for problem number 14. Now in problem number 15, we have provide in-house or outsource decision services with the qualitative aspects. Given the information, determine whether Tina should do the bookkeeping and tax work in-house or outsource it to the accountant. Now, the annual cost. If the outside accountant is hard, the bookkeeping cost is 12 times $25 per hour times 8 hours per month, and the quarterly tax compliance of the annual income tax filing of 350. So the total of 3,050. If Tina continues to do the financial work, the hours of substitute labor for all months except April is 11 months times 0.75 times 15 hours per month times 10 equals 1,237.50. The hours of substitute labor for April is 0.75. That's 40 hours times 10 or $300. The total cost of substitute labor is 1,237.50 plus 300 is 1,537.50. Clearly, the cost of Tina continuing to do the bookkeeping and the tax compliance is less than the cost of hiring the accountant. If cost is the most important factor, Tina will continue to do the financial work for the restaurant. And in requirement number 2, discuss the qualitative factors that would affect the decision, including strategic implications. There are many qualitative factors to be considered. Does Tina enjoy the bookkeeping and tax work? Would she prefer working more hours in the restaurant? Would the couple prefer that Tina spend more time taking care of LJ? How accurate is tax work? Would an accountant actually save money by suggesting alternative tax strategies for them? How badly do they need the extra storage that would be provided by the current office? How would this affect? Okay, number 2, the qualitative factors. Okay, number 16, special order decisions, and also we have the qualitative aspects. So we have the number of loans for L-Star, 5 months times 2 weeks times 20 houses equals 200 loan mowings over the 5 months. And accept or reject. If you reject, that will be 0 cost. If you accept, that will be revenue, 4,000 payments, 2 for and additional mower purchase and additional fuel. So that will give a total incremental revenue of 1,150. Accepting the special order will add 1,150 to income. Now in number 17, again, we are required for a segmented income statement here, and as well as your traditional income statement. So for the traditional income statement, we have revenues minus the variable cost. Then we have the direct fixed expenses. And we have the operating income of 18,200. With all 3 lines have product margins that are less than contribution margins. The corporate line is the least profitable. Gem, we want to find a way to increase the profitability of this line. Now using segmented income statement for the corporate, wedding, special occasion, we have the contribution margin figures here. Contribution margin different from the traditional. Since here we have to, here we compute for the operating income equal to 49,889 in contrast to 18,280. The corporate line is losing profitability while the wedding and special occasion lines are increasing. If Gemstones does not expect the corporate event situation to improve, she may want to consider dropping this line and concentrate more on the other two lines. Now here you have the answers to the multiple choice questions. Okay, that ends our problem solving. So for Monday, please, you come at 10 o'clock. We end at 12:30. Okay.